And with us right now, we've got Tyler Chesser. Tyler, you're the co-founder and managing partner of CF Capital. You are found on the web at cfcapllc.com. And then you got tylerchesser.com. Tyler, thanks so much for joining us.
Josh, it's a pleasure. Thank you for having me, my friend.
Absolutely. So CF Capital, multifamily unit investing. You pull together syndication deals. You're going through a lot of growth. You've had a lot of success. Can you kind of tell us a little bit more beyond just kind of like the headline there of like who you are, what you do, kind of maybe your how many deals that you've done or what kind of deals you do, region, that sort of thing?
Absolutely. Yeah, no. So I'll give a little bit of background. And, I got into real estate after really dropping out of the corporate world to a large degree, because I learned very quickly that I was becoming sort of a cog of this, this ladder that I was looking to climb over the next few decades. And so I was looking for a different path. And ultimately, long story short, I found real estate. Yeah. And I got started in real estate in the sales side of things. I was selling actual commercial property. And I learned the power of commercial real estate. I learned the power of creating, additional revenue streams, income streams through real estate and through owning real estate. And that's really how the wealthy think. And it was really fascinating to, shift my mindset from trading my time for money, to trading my resources for more resources and more time. Mm-hmm. That was a profound shift in my life. And so I started to invest in multifamily properties a little over 4.5 years ago personally, and then started forming more larger partnerships and doing bigger deals. And, ultimately over the past, 5 years or so, I've built a portfolio of over 500 units. And then we formed CF Capital actually this year, myself and a business partner, actually who I met in the brokerage space. We ultimately formed this company where we partner with accredited investors to acquire larger assets. And over the next 5 years, our goal is to acquire 10,000 units across the Southeast United States. We're based in Louisville, Kentucky. And we're kind of uniquely positioned to really access some very attractive opportunities throughout Kentucky, Tennessee, North Carolina, and even some of the Midwestern kind of markets in Ohio. And we look to expand further beyond that. Just from a migration standpoint, it is about occupancy, it is about job opportunities, but it is about, hey, where do people want to live? And, ultimately the success of an asset has to do with, the occupancy and the demand. At the end of the day, supply and demand 101, economics 101. Yeah. And so, that's what we do. And it's really exciting. It's also very competitive. So we always try to deliver beyond expectations and treat folks as we would want to be treated. And, our investors, for folks, it's like, look, if we were to invest in this deal, how would we want to be treated? And how would we sort of repurpose our capital? How would we invest in these deals ongoing and create a referral business? So that's what we do.
Yeah. So for you, was it unintentional or was it accidental? How did you stumble across real estate and say, yes, this is for me?
Yeah, no, it's really interesting because when I was in the corporate world, I was like, well, wait a minute, I was looking around and I'm seeing these folks that are 20, 30 years ahead of me in their careers. And I'm thinking, well, wait a minute, is that who I want to become? And so I started to have these deep questions of myself because I didn't have an entrepreneurial background. Like my family, we're not entrepreneurs. And so that was never a frame of reference that I ever considered. And so I started to ask these questions and say, all right, well, what else could be possible for my professional career? The first thing I thought of was, let's get the resume out and let's revamp the resume and let's start sending it out and let's start to find other corporate opportunities, because that's where my sort of modalities were. That's where my model of the world was, was that, hey, to get somewhere else, I've got to, trade my time for, a different type of opportunity. And so with all that said, I started to kind of ask questions around. It's like, well, what else could I do? I was actually doing international marketing for a Fortune 500 company. And I started to ask around like, hey, where else, may I fit, and I actually had a background in sales. Previous to that, I actually was working as a sales manager for another company. And, I ultimately started to think, well, maybe sales is a different path for me. So I started to talk to folks, and long story short, I was able to get into some conversations with folks in the real estate sales space. And I said, this is an interesting space, but it was my first step into the entrepreneurial world because, I was out on my own. I became a 1099 individual immediately who really, I had to eat what I killed, so to speak, and there was nothing guaranteed. So I was kind of, by happenstance, kind of placed into this entrepreneurial type of endeavor. But I found that I really loved it, but I actually started selling residential real estate. So I did not love that because it was very emotional. But I started to learn, it was interesting. I looked around and I saw these properties. I had no idea that that was also real estate, which is crazy to even say. You look around and you see the Jiffy Lube on the corner, you see the
Yeah.
apartment complex. To me, that was not real estate. Real estate to me was a single family home.
Yeah.
And so I started to switch my mindset when I started to learn about that. And I started to network in that space. And, it all kind of happened. Like when I look back, it's like the dots connect so easily, but it was, a little bit of a curious sort of path. And I was just, at first I was looking to survive. I was looking to increase my income. But ultimately I started to look for more fulfillment. I looked for how can I grow as an individual, because it became very competitive. I was also someone who didn't have a network in the space. And so I had to dig deep within myself to find what other skills do I need to develop? What other sort of mindset shifts do I need to make? And so that became ultimately what I became most excited about, was the growth that I experienced as an individual. And so that's what I'm super passionate about now, is just growing and owning my own personal mastery.
Yeah. So why is that so important to be successful in real estate? You keep talking about, your own personal growth, but I think it could be easy for someone to say, whoop-de-doo, it's just buying and investing in properties. I don't get it. It seems they might look at it from the outside and say, well, this is just much more transactional than what you're saying.
Excuse me, I needed to take a quick sip there. But yes, from the first thing that I saw was it was very stressful, because first of all, I was managing an irregular income, right? And where I came from, having a paycheck every 2 weeks. And so that's the stability of that, at least from a mindset perspective, was much different than stepping into an entrepreneurial role. And so the roller coaster of, hey, if this deal doesn't work out, how am I going to pay my bills, whatever that may be. And so that was the first step for me, was owning and really mastering stress and understanding fear, and really getting, conscious about, what that was all about, and how can I live within that uncertainty? Because what Tony Robbins says is the more uncertainty that you can, endure, the more success that you can create in your life. And that's maybe not the exact direct quote, but I find it to be fascinating. And so I kind of went down these rabbit holes. It's like, well, if that's true, what else is true? And one thing I realized about myself is that through this process, my curiosity was something that could never be fully quenched. And I also learned that being multidisciplinary and multifaceted was one of the ways that I could become dominant in my industry. And, if I just wanted to get by, if I just wanted to be slightly above average, of course, I could just focus on investing and learning all the tactics and strategies to do that. But if I wanted to be the best of the best, if I wanted to be a master of influence to other people, which at the end of the day in real estate, it is about your network. It is about, your relationships, and it is about, influencing other people, especially in negotiation. As an example, of course, we can look at it from a perspective of, hey, what are your principles that you're not willing to give up on? What are my principles that I'm not willing to give up on? And, is there anything that we can sort of meet in the middle on? Or we can say, hey, wait a minute, everything that humans do, are based on emotions. And how can we understand these emotions intimately, within ourselves as well as other people? And so studying psychology, studying biology, studying, how do people deal with fear and stress, and what sort of telltale signs do they give to me when I'm having a discussion with them? And it's very, very interesting to learn how much, really, at the end of the day, how much value you can create through having a deep and, multifaceted understanding of these type of principles, in addition to, managing your own stress as, while you're managing your business, you're working on your business and in your business. It's something that's extremely important, and something that, it's really a fun thing. I almost look at it as a game now. It's like, well, how else could I apply innovative thinking from, a philosophy that Marcus Aurelius talked about 2,000 years ago to my business today in 2020. And it's really exciting. And also it really helps me set my business apart from the average, ordinary business out there, because in my opinion, you either are the best of the best or you get crushed, especially in this business. And I've absolutely seen that. And you know what, I'm committed, to doing whatever it takes. And to me, doing whatever it takes is investing in my own mindset and my own ability to continue to grow.
Yeah. So in the world of real estate investing, obviously there are a lot of options. You could single family, commercial. So it sounds like you mainly are looking for multi MDUs, right? Multiple dwelling.
Multifamily apartment complexes.
Mm-hmm.
And I can tell you why. I mean, at the end of the day, if you look at it from especially even the pandemic standpoint, human beings, we need food, water, and shelter. Those are the necessities. And of course, in good times, folks like to have luxuries. They like to have, they like to travel. They like to go in hotels. They like to drive in very nice cars. When times are tough, at the end of the day, they still need food, water, and shelter. And we find multifamily apartment complexes to be not only a risk-adjusted way to grow your capital, but it's also a way to preserve capital. We look at it from an inflation perspective. You look out in our world today, and we've got money printed to oblivion to a certain degree. And what does that do to the value of your dollar? Now, if you're invested in multifamily apartment complexes, at the end of the day, your rent will also follow the path of inflation. And so the same happens to the value of the asset. Not only that, but you've got multiple ways to drive revenue, to drive your top line, to manage your expenses, to add value, whether we go in and say, all right, we've got an underperforming asset, and there's various different, tactics that we can employ to raise the quality of this asset, or perhaps even reposition it. And that's the other thing from a multidisciplinary perspective that I think is important, with my marketing background and understanding psychology and understanding perceptions of human beings. We go into an asset and say, look, this is totally rebranded, or this is totally branded in an incorrect capacity. And we need to rebrand this asset so that we can attract the appropriate tenants and employ a new business plan and raise the value of this asset so that after 5 or 7 years, we sell or refinance the deal and our investors win, as well as the quality of the community. And so, our philosophy is that we can elevate communities together through this process, not only for our investors, not only for our employees, but also for the communities that we're investing in. So we think it's a win-win for everybody. And, I believe in multifamily. I've seen it work really well in good times and bad. So, that's the thing I love about it. It's a long game, and, you need to be prepared for any side of that coin.
When someone invests in a multiple dwelling unit, I guess there's varying levels of involvement in the project, of course. But typically, are you, I would imagine you'd have a management company. I just wonder, how involved, and the reason I ask this is I noticed that, on your website, what's the term that you use? Elevating communities together, right? And so how involved are you in the community, the community of people, with whom that you're working with in terms of the tenants for the properties?
Yeah, no, that's a great question. And for all of our assets that we invest in, we utilize third-party property management. And, essentially what that means at the end of the day is that we employ great people who know these neighborhoods, who know these markets, who know these assets, who know these people that are boots on the ground every single day. And ultimately, CF Capital, myself, my business partner, our team are responsible for being the asset managers of these assets. And we are, we're stewards of the capital that we invest, that our private investors, our passive investors invest with us. And at the end of the day, we implement a business plan and a strategy and a vision that we set for an asset based on research, based on our understanding of the potential of this asset, as well as, market research, so on and so forth. And so we essentially manage the manager, and, we're on top of the boots on the ground team to say, hey, this is going well, or this is not going well, and what can we do to collaborate with them? So, we do not manage within our team, and that's not our expertise. That's not really, what sets us apart. But what we do is we're hands-on with everything that we do, and we set the vision and we implement that vision through really being asset managers.
Awesome. So so right now you have an offer, you're putting together syndication deals. And so if someone's an investor, they can connect with you, be a part of that deal. Can you kind of explain who that person is, who they should be, their background, who you prefer to work with, maybe, culture fit as well. I don't know if it really, you don't necessarily it doesn't sound like you're really after sharks. No slumlords here.
No, it's so funny. We are definitely not slumlords, and it certainly has to be a culture fit because it has to be people that they're looking for win-win situations. They're
Yeah.
looking for win-win scenarios. We're not looking to strip, burn, and turn properties and leave communities decimated just for in the name of profit, because we believe that the better we treat people, the better that we will be treated. And a friend of mine in the industry has a slogan that he lives by that says, do good and do well. And I love that. And so that's essentially a mantra that we sort of incorporate as well. But the folks that fit our opportunities to be a passive investor. And also, by the way, I'm a passive investor with others as well, so I know what it feels like. I know what the process looks like from that vantage point. So we always treat our deals like we would want to be treated in that seat as well. But to be a passive investor with us, folks will need to be accredited investors as defined by the SEC, the Securities and Exchange Commission, the United States SEC. And basically what that means is that you have earned over $200,000 over the past 2 years, and you expect to earn that or more in the current calendar year. And or you and your spouse have earned $300,000 over the past 2 years, and you expect to do the same in the current year, or you have $1 million net worth, not including your primary residence. And one thing to note is that their definition of a accredited investor continues to evolve to a certain degree. So we'll need to stay on top of that. And I think they're actually evolving it as we speak. Some of those requirements may be changing a bit, so we'll stay on top of that. But as it is defined currently, that is the requirement. And typically the minimum investment in our deals is about $50,000. So certainly no small check size. And it is illiquid. It's not a deal where you say, hey, I'm going to invest in this deal, and then 6 months later I want my money back.
Right.
You committed for 5, 7, 10 years, depending on the asset. And obviously we're always paying attention to what's the best way for us to exit this deal. Is it, do we need to hold on for 7 years if that's what we plan for, but the market's giving us an opportunity to exit in 2 or 3? Yeah. Obviously we remained, plugged into that process and do what's best for everybody involved.
What does ROI typically, I mean, there's no typical, but I mean, what would you aim for? What's average for an exit?
Yeah, no, it's a great question. And, it's so interesting because in the beginning of the pandemic, we're thinking, great, buying opportunities. This is going to be awesome. And obviously we're try to be compassionate as well and recognize the level of, challenges that were presented by the pandemic. So let me just say that, but also I did, kind of looking back, it's like, wow, the industry has gotten more competitive. And so yields have been compressed. Risk has been slightly increased just based on the uncertainty of the marketplace in so many different capacities. However, I will tell you that, like you said, I mean, there is no typical, but typically we try to strive for, we call it an internal rate of return. You could call it a return on investment, which is basically a pretty complex, calculation of, hey, here's my dollars in, my dollars out, including my cash flows received on a monthly, yearly basis. But we typically look to achieve between a 12 to 15% return on investment, totally. And, that also includes, your monthly distributions. We always pay a preferred return. And there's also a participation in the upside there. Typically it's, 70 or, 60% of the upside as well, that investors get to participate in. Also beyond that, you've got some immeasurable tax benefits being a part of these deals. We do pass those through directly to our investors. And so a lot of our folks really love that. We also do cost segregations to where folks can enjoy bonus depreciation early on, which is really, a great mechanism for folks in terms of protecting and preserving their capital. But we typically look for about a 12 to 15%. There are times, as I mentioned, if we were to exit earlier on a deal than we expected, where we can hit 20% or more, but we like to underpromise and overdeliver rather than the opposite.
Sure. Great. So someone's been listening to us. They're like, okay, I like this guy. Tyler's got a great, you have a very likable philosophy. I mean, I appreciate your take on this. Where would someone get started? Where do they go? What do they do?
Yeah, so we've on our website, just go to cfcapllc.com. There's a button there in the very middle that says invest with us. Mm-hmm. And basically what that's getting you to do is really just fill out a brief form there, and it will give you a prompt to schedule a 15-minute meeting with myself or my business partner, Brian. And from there, we just have a quick conversation, and our goal is to learn about your goals. Our goal is to learn about you as an individual. And, there's a lot of times where we say, hey, this may not be a fit for you. And there's times where we say, hey, this is a great fit for you. And so, we'd be happy to share opportunities with you for your consideration. There's never any pressure for any folks to invest with us. But, once you fill out that form, then you'll be on our distribution list to be notified of future opportunities, which then, we'll have, 15 to 30 days of a kind of decision-making process. And from there, we'll answer your questions. We'll provide all the materials, and you can say, hey, this looks good. Let's go for it. And that's basically how it works.
Yeah. Awesome. Tyler Chesser, again, thank you so much for joining us. You are the co-founder, managing partner with CF Capital, found on the web at cfcapllc.com. Thank you so much for joining us.
Thank you, Josh. My pleasure.